Hear me out. If Toronto prices would drop another 50%, where would that bring us in the timeline? Going back, how far back do we have to go to see 50% of the actual current prices in Toronto real estate market? I'm not saying that this will happen. And also, I would like to bring another point why we hear different tunes. Half of the population wants the actual prices of real estate to be reduced, and the other half doesn't want to. I would love to talk to you about this in this particular video, so stay tuned and let's get right into it. Okay, I get it. It is dramatic, 50% off. But where would that bring us back in the calendar? How far do we have to go back in order to see that 50% of the current average price in Toronto market? And why most of the people are freaking out? People are freaking out because no one can afford anything anymore. So let's get right into it. I will share my screen, but before I do that, let's just get into the actual statistics and let's get what is actually going on. So the breakdown today is that the average house is well over $1 million in Toronto. So in order to have, let's say, a 50% reduction, all right, 50% off in the market, how far back do we go in that timeline? So we would actually go back between 2013 and 2014, and the average price was between $500,000 to $600,000. Guess what? Even at that time, I was trading. I know how that felt. Yes, it did feel expensive even at that time, 2013, 2014. This was a lot of money. But let me tell you, a lot more people could actually get into the real estate market. It felt more stable. And I believe around that time, right, the interest mortgage rate, you could have gotten between 3 to 4%. If you were in the market, please comment below how you felt buying a property around this time, or if you know a neighbor, a friend, if you have your own experience. But I know for myself, I traded, I owned real estate and all of that stuff. Even in this period, I know it was so much easier. Never mind if we get into a condo market. That's a completely different ball game altogether. I remember in central Mississauga, one of those older buildings at the time, probably 30 to 35 years old, 1,300 square feet, maintenance fees around $700 to $750 at that time, taxes being around $1,500 a year, everything was included. These condominiums were selling between $150,000 to $200,000 at that time. Today, the same condo sells for $700,000. Maintenance fees are over $1,200 or $1,200 plus a month, and the taxes are, I think, $2,500 a year. So that's a significant increase, a large increase for the same identical product, plus the complex or the building, it's much, much older. But having said that, why half of the population is voting or hoping for the actual prices to remain or go even higher? So now we have to actually get into some data. So sharing my screen, it says here in 2022, the home ownership rate in Canada was 66.5%, which is slightly lower than the peak of 2019, where it was 8.6%. Think about it. 66.5% on average in Canada is somehow invested in real estate. Either they paid it off, they own it, they're hoping to further bank on this particular house. I mean, it's a piggyback, like it's a personal banking system. And like just going back to a point, what I actually wanted to bring, which was, in 2014, if we go here, 2014, these properties, right? So a year later, these particular properties jumped in 1 year to 600, on average to 650. And we're talking Toronto, we're talking detached, and we're talking a solid property. Now, based on this scenario, between a year to 2 years, we have seen an increase on average between 5 and 10%. I mean, look, it will depend on the community, on the product, and whatnot. So going back, how would we increase the value? What was the catch? Number one is you want to have your own property, safety, pride. You want to own something, right? You want to be able to retire on something and bank on this particular property to have these particular funds so you can actually retire. Because retirement is tough nowadays. We all know that. It's extremely tough. And many, including this 60 some odd percent, are banking on that. And of course, you invested all your life trying to pay off this mortgage. It's a headache. I get it, right? But now we get to another point where the actual prices increased in like right here by the statistic. They 2023 versus 2013, which is 10 years apart, we have seen a surge more than $1 million. $1 million, right? Guys, are you kidding me? Like that's insane. That's 75% increase in equity. So what happened? This is what I'm trying to actually, that's why I'm making these videos, just to open everybody's eyes, because 66% are vested in, I get it, they don't want the market to switch. The other, 40%, some 30 odd percent is sitting there thinking, oh my gosh, how can I even own something? Like, this is ridiculous. Where's the ceiling? How can we move forward? How can we have a further growth if everything is sucked out? The entire economy is completely sucked out. And if you have someone that saw this type of increase, which is great, but then you have a recent increase from 2013 to 2023 to 1.6 million. So this particular person, right, they paid some off, they had their own down payment, and plus they have $1 million in their bank account as equity. So along the way, majority, not all of you, but majority invested in pre-construction units. They started growing. They started doing all kinds of different things, because real estate never fails. And having said that, and I know some of you commented, I replied on these comments on previous videos. People that went through it in the 80s and the 90s, they remember. They say, look, it is an identical situation as it is today. It was crazy, ludicrous, everything was going, the equity was there, and all of a sudden, handbrake, boom, we saw huge deficits. We saw incredible falls with people, investments. I even have a gentleman on my channel. He lost 7 homes in 1 year. Proper businessman, making money hand over fist, all of that stuff, no problem. 7 homes, young gentleman at that time. He said, I could not believe how I lost 7 homes. And someone on my channel here in the comments commented, hey, guess what? Like, if they kept all these homes, like from the 90s, is it cheaper in the 90s or is it cheaper today? Look, man, it is obviously cheaper back then than today. But how can you stay above the water keeping all these properties for 20, 30 years if you have no money, if you're dipping in all kinds of savings? Because this is exactly what is happening. I did not work on one deal in a long time where I saw positive cash flow on anything. Anything, doesn't matter whether it's a detached home, whether it's a condo, whether it's whatever, right? And I'm not even talking Toronto. I'm not even talking Toronto surroundings. I'm even talking 2 hours from Toronto. It's hard to get a positive cash flow property. So where does this lead me to? It means that a lot of people are either paying out of pocket, they're hoping for that equity boost jump that was happening all along. And I'm not saying that 50% off will happen, 50% declines. I'm not saying that. But 50% will only bring us to 2013 and 2014, right? And then you have the other side, those folks that are a little bit more mature, they have more life experience. They have they keep yelling at their kids and their grandchildren and how they can not achieve anything in their life and all of that stuff. Like, I heard those stories before, and I asked them the question, hold on a second, you bought your property then, it costed you X. Yeah, but even it wasn't cheap. I get it. Real estate, it's never cheap. Never ever is it cheap. It's always expensive. You always have to somehow suffer. You always have to get that down payment. You always have to earn the right to be an owner, if you understand what I'm saying. But I asked them, I'm like, look, were you employed back then? And they're like, yes, I worked for Ford. I'm like, okay, great, good for you. Ford, stable company, you had benefits, you had this, that, you had to pay. Did your spouse or wife, was she employed? No, like, we have 3 kids and she had to take care of that. Oh, you had 3 kids, you have to take care of everything. She had to take care of everything in the household. Yes. So was it enough for your earnings at that time to cover mortgage, vehicle, expenses, everything that needed for these 3 kids and everything else? Like, yeah, easily. So these people, they cannot make it today. Even couples working 24/7, they cannot achieve these goals. They cannot save 20% of a down payment. So I understand you should be hard on your kids because you want the best for them. But it's not easy to save $400,000 for a crappy condo in downtown. That's down payment only. I'm exaggerating here, but you know what I'm saying. It's not that easy. Taxes, everything. You go to the grocery store. You know what you're going through? $100, half a bag, right? I remember, right, 20 years ago, walking in with $100 to our local grocery stores, and like a full cart of things, right? So I get it. Things are moving forward. Things are moving the way they're moving. But I'm saying I do not want to exclude this 50% off. Even though it's far-fetched, I don't want people to lose money. Like, obviously, like, nobody wants to lose money. And I'm hoping that we have some kind of a soft landing and some equilibrium, some type of situation where everything can fall into the right place. But the way that things are happening, there's not much that they can do. And if people cannot afford, they will start to default. And many are starting. Power of sales, mortgage delinquencies. I think our death in Canada was the highest ever recorded in history. All right. So when you put all these things, and then obviously some other geopolitical stuff that obviously it's above my pay grade. I don't know what is going on, right? Like, but I'm sure some of these, high educated people know how to explain what is going on, not me. But all I'm saying, what I see from the front lines. And the only way how this can move forward is with more debt. That's it. And that's not the solution, because people don't have anywhere else to reach. They're out of pockets. That's it. So I hope you got something out of this video. Please click on the other videos that I have on my channel, and I will see you in the next one.